As capital flows shift across Southeast Asia, one market is clearly lagging behind, ours. Vietnam's stock market is now one of the region's busiest, with daily trades topping $1 billion. The Philippines, meanwhile, trades at only about a tenth of that volume. Data from Bloomberg shows local trading value hovering around $100 million a day, far behind Vietnam, Indonesia, and Thailand. Analysts say investors are staying away because trust in our system, from regulation to governance, remains weak. Joining us now is Jomar Lacson, the head of macro and sustainability research, to help us understand why the Philippines has fallen so far behind our neighbors and what it could take to rebuild confidence in the market. So, Jomar, thank you for being with us. Jomar from ATR Asset Management. Jomar, the PSC we've fallen further below the 6,000 level. Right. The peso is not the picture of strength. What's driving this slide in your view?
Well, there are, multiple factors behind the recent performance. I think chief of that is the peso. We've already experienced that wherein when the peso becomes volatile, it does affect the dollar returns of foreign investors. So this creates a little bit of, a risk factor for them. But if you look at the peso, it's one of the key reasons why it has weakened is that, in our view, there's expectations of a timing difference between the speed by which our central bank is cutting rates and that of the U.S. And what our view is that we'll have to maintain certain independence. The concerns of the Philippine economy is a bit different from the U.S. Growth is actually a bigger concern, I think, for us going into 2026, and that's the reason why we think that the central bank's position of cutting rates in a bit more aggressively, or they're being more accommodative, is actually a correct move on that part. Now, what it does mean, though, is that the differential between U.S. rates and Philippine rates is narrowing, and that means that between Philippines and say the U.S., the trade-off between risk and return seems to be more in favor of the U.S., and that's why you may see that peso moving a bit away from the Philippines, meaning it's weakening.
Yeah,
so.
The bourses in Asia are in the green, up sharply today, as concerns over the trade war between the U.S. and China are cooling. Our market going the other way. How much of this current weakness stems from the trust deficit, given all the corruption allegations and the political risk associated with the Philippines, Jomar?
Yeah, so I think the primary factor would still be the interest rate differential, how the expectations on where we're headed. But when we look at what's happened, and I'd probably just rephrase it as sort of like how trust goes into a political risk model. So the question here is whether our foreign investors look at our country with with a heightened level of country risk or political risk. And it may, over the past month, the issues with corruption in the infrastructure projects may be enhancing that political risk, because it does suggest that there is some, we need to review our institutions, how strong are the institutions to protect themselves for governance issues.
Yeah, begs the question, where are we headed? The main gauge is now down sharply, down 1% to 59.31. Foreign outflows year to date are at $750 million US. What does this picture tell you, and is the momentum to the downside?
Well, what's important is the growth aspect. For us, what we need to show, apart from, of course, that the support for growth will be there. And that's the reason why we think one of the concerns we're headed into 2026 is, given all that we've learned over the past month in Congress, and what are the actions being done by government agencies. Because our experience in 2010, when there was a governance sort of a review, the policy was sort of like to review everything. Let's stop spending for a moment and let's see first what has, what are the governance issues, or is there any corruption here? And what we saw was that there was a contraction in government spending,
Yes.
and that takes out one engine of growth from the economy.
A very chunky engine.
But now, we need to find out when it comes to, I guess when the GDP results come in November, is whether we're now also seeing that. We don't have any evidence at the moment, but we do have our more anecdotal evidence that agencies are now reviewing, because we now know what to look for. Okay, given the what has been discussed in Congress, we know sort of there's a pattern. So I think that's now where we're now looking at each of the agencies, maybe. But when we've seen so far in investigations are certain pockets.
Yeah.
Hopefully
yeah.
it's not too broad.
Yeah, people are factoring it in. They're factoring in the effect of the cut down on government spending. That's going to be pretty chunky. Q3 GDP right now projected at around 5.2%. It's a soft patch. Do you think this is a sign that momentum moving forward is going to be slipping, coupled with the big slowdown in government spending?
Well, would we already assume this, that there is some slowdown, because the behavior of the government we assume that it will be similar to 2010. So what's important here are the rate cuts being done by the central bank, by BSP, because if one engine is sort of like taking a pause, reviewing, I guess internalizing, what we need is another engine to come out. And that's what has been sort of missing over the past, 8 quarters, is the investment side. And the interest rate cuts are sort of designed to get the private sector now moving to sort of like put more grease in the wheels for the business sector.
Yes. The BSP has cut rates of 4.75%, with another move in December on the table. Do you expect further easing, and how far can rates go in 2026 without pushing pressure on the peso, which is already hovering at 59?
Well, our view is really that they will continue to cut, because it's important. Growth is our issue for the domestic economy. But having said that, we also believe that the Federal Reserve will also start cutting their own rates. So there's just a timing difference for us, meaning we might actually see this weakness in the fourth quarter, but once the Federal Reserve starts cutting, then the interest rate differential will start widening again, and this will now sort of stabilize the peso.
Okay, so we've got a growth issue. The December cut on the table, you think that's baked into the cake, a 25 basis point cut in December, Jomar?
Okay, sorry, can you repeat that?
Do you think that's baked into the cake, 25 basis point cut in December?
Yeah, I think we already made, in our forecast, we already assume a 25 basis point cut for December. Having said that, the peso is still, it can still be managed. I'd just like to point out that we have sufficient international reserves to stabilize the peso at this point. So we do believe that in this interim, I guess the temporal volatility will be managed by the BSP.
Okay, Jomar, thank you so much. That's all the time we have for this. But thank you for being here with us.
Thanks, Maggie. Glad to be here.